The next income, which is chargeable under the head profits and gains of business and profession, is certain payments for not carrying out any business activity. Now, what happens is that many a times, and this is becoming very common. I don't know how many of you are aware, but there are many transactions in India which happens. Let's say, for example, you recently had a transaction wherein a foreign player in the food business acquired the domestic business of an Indian company. So, what the foreign player did was he acquired this business, and what he said was that, okay, I am going to buy out this business from you. Let's say X Limited was carrying out the business of selling rice domestically. Now, A in USA acquired the business of X Limited, which was selling the rice domestically in India. Now, the business of A would have been terribly affected if instead of A only, X also continued to sell the rice domestically. Why? Because then X would have become a competitor of A. So A said, okay, I'll buy out this business from you, but the condition is that you will not do this business activity in India anymore. No more activity in India. So this money which is received or due to X Limited from A for not carrying out any activity, in this example, selling rice domestically, is chargeable to tax under the head profits and gains of business and profession. Now let's read the text. Sum due. Due means there is a contract, the amount is due, payable or received, whether in cash or kind. Now this payment can be received either in cash or kind. This thing is applicable both to this clause and this clause. For not carrying out any activity in relation to any business. So in my example, X was carrying on the business of selling rice. Now A made a payment to X saying that I'll pay you $10 million and you are not supposed to sell rice anymore in the Indian markets. So this payment of $10 million received by X for not carrying out any activity, for not selling rice in the domestic market, is basically chargeable under the head profits and gains of business and profession. However, having said this, if you receive a money which is chargeable to tax under the head capital gains, and we will see that when we move on to that chapter, excludes sum for transfer of right to manufacture. Now, here, if there is any kind of a payment which is being made for transfer, so what is happening here is that instead of this, let's take another example. Suppose X had the right to manufacture any commodity. Let's say right to manufacture liquor. Okay. X transfers this right to manufacture to A. Now they have, although in this case also X has agreed not to carry on manufacture because the right to manufacture itself has been transferred. So that is also kind of for not carrying out any activity in relation to any business. But right to manufacture is a capital asset, a capital asset. And profits arising on transfer of a capital asset are chargeable to tax under the head capital gains. So if you come across a situation where there are any income which are chargeable under the head capital gains, then that is not taxed under the head PGBP. That will be taxed under the head capital gains itself. So excludes sum for transfer of any right to manufacture, produce or process any article or thing, or right to carry on business chargeable under the head capital gains. So if the payment is for transfer of a right, this is very crucial because this is what determines whether the income is chargeable under the head capital gains. So if the payment is for the transfer of any right to manufacture, produce or process any article or thing which is chargeable under the head capital gains, then it is not taxed under section 28. Section 28 not applicable. This was insofar as the first payment is concerned. Now let's see the second one. Sum due or received, whether in cash or in kind, for not sharing any know-how, patent, copyright, trademark, license, franchise, or any other business or commercial right of a similar nature, or information or technique likely to assist in the manufacture or processing of goods or provision of services. Many a time what happens is that there are certain intangibles that are generated. So what may happen is, let's say again the same example, X Limited. X Limited had the trademark. Trademark is what? It's kind of a brand name. Just like you have McDonald as a trademark, you have other trademark. Let's say X Limited had a trademark, say, which trademark? Let's say X. Now A Inc. come and buys a part of business of X. The one I gave you in this earlier example. Suppose the business which A Inc. bought was, say, selling rice. Now they would not want that this trademark, in the market you get so many trademarks. Let's say you have Kohinoor rice. Okay. Now if suppose A Inc. buys Kohinoor business, they would not want that this trademark or the Kohinoor brand name should be used by some third party. Suppose tomorrow B comes in and he says to X, please allow me to use your trademark Kohinoor and I'll pay you a lot of money. So A Inc. may also enter into an agreement with X telling him, boss, you can't use this trademark, you can't allow this trademark to be used by any other person. To compensate you for that, I will give you X amount of money. So any such money received by X will also be chargeable to tax under the head profits and gains of business and profession.